Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And TLT has been all the rage amongst people trying to read charts and anticipate the future of what the Federal Reserve is going to do. I haven't yet bought TLT. Instead, I bought the bond directly on Charles Schwab. I'm going to show you how to do that and talk about why I didn't buy this trade directly, as in TLT, as in Dylan has. But I'm going to give you my take on it.
Two Super Guys Trade Stocks.
All right. So anyone's kind of exposing themselves to this realm a little bit. It's similar, seeing something similar to this, right? This stupid cartoon of the blob here, kind of showing the inverse relationship between, rates or yields on bonds and the price of the bonds. Basically, as the yield of the bond goes up, the price has to go down and vice versa, right? It's like a little seesaw here, right?
Mm-hmm.
That's the whole idea. And when you look at a chart like this, right, this is the Federal Reserve funds rate, which kind of underpins a lot of these bond rates. It looks like we're at a really elevated level, right? Like if you look at this chart here, you're going like, oh man, the baseline's like 0. It's going to eventually revert back to the baseline, right? Isn't that the kind of the assumption if you're reading this chart?
I have 450 shares of TLT. My cost average is, I think it's 92. I'm gonna have to double check. I don't think it'll go back to baseline of 0. I don't think that's realistic. I do think it'll go to like 2.5.
Okay. Fair enough. But this is data back to 2014, man. This is almost like 10 years of data here. All right.
I feel
That's
like,
what the baseline has been for the last decade, right?
well, okay. I haven't seen this presentation. I'm gonna say if you show 10 years before this, it's not there. Okay. All right.
Just kind of baiting you in, right? So this is as far back as we basically have, Federal Reserve fund rate. And, if you're looking at this chart, you got a very different interpretation of what like the baseline or like the typical kind of rate for, Federal Reserve funds overnight lending facility should be, right? Like if I'm reading this and obviously this isn't exactly scientific here, but it's really trying to find out where the midpoint is and where like the natural set point for this thing is during this entire time period. You're looking at maybe closer to this 4 to 5% range, right? Like
I
that's
would
kind
agree
of
with
more
that.
in the meat of this whole kind of ridiculously shaped. Kind of looks like a Disney castle here to me a little bit. I don't know
Yeah.
about you.
I will say the argument against it staying at 5 is that when you compare the 80s to now, prices to earnings are in no way close to what they were. So if you had
Yeah.
like a 17% interest rate, like we had up there, yeah, I mean, unemployment, so many bad things that happen. I don't even know how to explain that.
There's a lot of arguments, right? They weren't doing this when they had $30+ trillion in federal, debt either, right? They were the
Yeah,
federal government's now paying what $1.2 trillion a year at the current interest rates in order to keep that financed. Like it's insanity, and at some point, as Jerome Powell said recently, we're not on a sustainable path as far as the kind of fiscal policy goes in the United States. So leave that
exactly.
at that bit.
And well, I mean,
So
just in interest, I think we surpassed our military budget, right?
yeah, military
Yeah.
budget's like 780, 800 billion, somewhere in that
Yeah,
ballpark.
so we can't
So
stay
this is
at
a
this rate.
1.2 trillion. Yeah, it's a pretty sexy number. So this is kind of the main account that I like actively trade with. This is like an old IRA that I rolled over and then I kind of have funds with. But I was sitting on like almost $13,000 in cash in this account. I do have like one that's a cash cash secured put here on Oxy, so that takes away some of my available cash for trading. But I had some in here that was available for investing, so I was like, yeah, maybe I'll buy the bond directly and see if I lock in a little 5+% rate for a little period of time and see how that goes. My first time ever buying bond, so this is literally my first time. I did it today. On Charles Schwab online, you go to the bonds tab here. When you go to that, it pops up with this other screen that allows you to kind of pick your maturity and what kind of bonds you're looking to buy. I went with the US Treasury and I did 1 year. It's a fair timeline. I kind of pointed out to Dylan, CDs up here offering 5.7% over the same time period. So it kind of makes it look stupid to do a bond, but I figured I'd try it this way
You
anyways.
get
It's
the
not exactly a good
appreciation
position.
of the treasury note. You don't get the appreciation. Now, granted, if you're asking me to be completely logical, do I think like I'm in TLT? Do I think TLT's price will be super different a year from now? No, I actually don't. I don't think that's enough time. I'm counting on the
Interesting.
covered calls and puts at that point in
Yeah, I
time.
like it. Yeah, it's a good thing to kind of wheel on. So once you enter that kind of time period you're looking at here, so like I said, 1 year U.S. Treasury, it gave me a whole list of options I could purchase here. Um, I'm a simple guy. I went with the first one up top because it was offering the highest yield to maturity. 5.455%. I'm like, all right, that sounds good to me. I clicked into it, and then it asked you how much do you want to buy, right? So the actual default was 25,000. So I had to change it to $1,000, because I ain't balling like that. And then once I clicked execute there, basically it come up with this, filled the screen here. This is my order had actually executed. Basically, it cost me $956 to buy a bond that will be worth $1,000 next October. They discounted on the front end, right? That goes back to that inverse relationship between price and yield. That's kind of calculated off the front. There's also a coupon which comes in separately. That's a payment you receive during the time period, but ultimately that's how much it'll be worth. $1,000 I'll have received by the maturity date, which is the next October.
Okay.
It's a pretty simple process. Honestly, it was a few clicks, and it was probably barely longer than executing an options trade. So not overly complicated. Now that I know what the hell I'm doing, that's a completely separate topic.
I'm going to ask you my TLT question at the end here.
Sure. That was literally, it basically here. All you're seeing is now is the actual final fill order. Like I said, $955.15 is what it cost me to purchase that $1,000 a year from now. Reminds me of like that meme with the cheeseburgers. I got these cheeseburgers, man.
So good.
Yeah.
Let me ask you this. So why no TLT? Now, I'm not saying that this is a bad idea. I'm probably gonna do it myself if I'm being completely honest with you. But why avoid TLT?
So one of my kind of cautions with TLT is that it does contain assets that are now underwater, kind of like many of the large banks. That in theory, if the held to maturity would be back to par value, but I don't understand enough about the market to know that TLT is completely insulated from some sort of systemic shock where it's forced to liquidate quickly and has to sell those assets at the current market value rather than holding them to maturity when they be made whole again. So that's kind of one of my unease with going into the TLT trade. It's not something. It could be very reasonable, but it's not something that makes me sleep well at night. When we value a stock, right, we all don't know the future. Whereas with bonds, I feel like there is a better ability to model the future so that there'd be a knowledge gap between myself, who this is literally my first time ever trading in any bond whatsoever, and someone that has actually a good education as far as pricing of bonds. I don't know. That's my thought.
Okay. So let me ask you this. Is there a world in which yields go down and TLT, like yields go down substantially? Like let's say, I'm going to guess, we both don't know what we're doing, by the way, everybody. We have no idea.
Yeah.
I'm going to be very clear about that.
Yeah. Channel name's accurate. Yep.
Yeah. Let's say 2 years from now, we're at 2.5%. So it dropped 2.5% in total percentage. Is there a world in which bonds, act like they should, but TLT does not?
I mean, I guess it's possible. I don't think it's likely, but I'll never say never. You don't think it's possible at all?
Okay. It is possible, but it's also possible that we could default. You should never speak in extremes.
Exactly.
I don't think it is 99.9%. It's not probable.
Yeah. It's not probable. Exactly. Yeah, that's exactly where I was trying to go with that. It's something that I haven't done before. I haven't had enough kind of time following it closely where I feel like I have a comfort level with it. Where I've been doing individual equities for years, and like now I feel like I at least understand the basics of it. But bond trading and ETFs of bonds, it's a little outside my comfort zone.
So let me tell you why the bond straight does not get me excited. Okay, you are getting how much?
5.455 or something like that. 5.5.
Okay,
almost
5.45.
Yeah.
Okay, Robinhood just gives you, I think it's 4.85 or 4.9 right now. So it just throws it. You don't have to do anything. It's just right there.
Yeah.
Right. And then if you do TLT, which full disclosure, guys, I have 450 shares in TLT. I plan on buying more, so I'm slowly easing into this.
He's committed.
You can do covered calls or puts. I don't see a world where all these other ETFs that we talked about, Zeros, GovZ, all these go up because yields went down and TLT doesn't. Now let's say it becomes something that you said earlier, like an individual trading asset where it doesn't necessarily match what it should be matching, that's when Buffett comes in, right? He looks for those. He's like,
Yeah.
this doesn't make any sense. I'm going to throw a bunch more money at this. So
Yeah.
for me, it just seems like a better idea. I feel like there's more upside. I don't see as much downside. Now, here's where I could be wrong. Strongman Personal Finance, the guy that yells in the
Yes.
mic. I've only
Gotta
seen,
take your shirt off first. But yeah.
yeah, I've only seen 2 videos because he just screams a lot. But I know that you sent me a video of a live, and he was essentially saying all the TLT guys that are buying TLT are clowns. So I would be a clown in his eyes.
Yeah.
We'll see what happens. But
I mean, so is Bank of America on their like $100 billion in paper losses. So yeah,
they're
they're not
what?
the only ones. $100 billion in like paper losses.
Oh, did he
Oh,
call Bank of America clowns? I don't watch it.
no, I'm saying every large bank in the U.S. has bought a lot of long dated Treasury bonds when their yields were very very low, and that's why they're sitting on all these unrealized losses that are in
Oh,
monster
okay.
numbers.
Sorry, I thought we were talking
It's
about
not
okay.
just a TLT problem; it's a kind of a large banking problem throughout the whole U.S. And all of them are set up so that if for some crazy tail region, I just listened to Jerome Powell talk about this. Something unforeseen happens, like they could all be kind of correlated more than they should be. Put it that
Right.
way.
That's fair. So technically, guys, I would be a clown to strongman. But let us know what you think. I'm still not at my full position to TLT. I do think bonds are. I mean, they're safe. I don't think it's a bad idea.
Yeah, I don't know. Two
All right,
stupid
guys,
guys trading stocks.
and losing all my money. Bye bye.
Yeah.